What is going on, everybody? Welcome back to Man and Machine episode 149. We've been doing this a while, coming up on a big 150 that we'll have on Friday with the automation station. But we're here. Dillon, Ben, Mark Phillips from Harvested Financial, our fantastic RIA partner. We got a great show for you today. Happy Monday. Before we dive in, let's get some music. I'll get the banner up. Maybe there is music. Maybe there's an echo. I don't know what's going on. But anyway,
I got you on the music.
All right, cool. How did everyone's weekends go? Mark, do you have a little bit of color? I mean, did we get some sun this weekend?
It's possible. Had a little family barbecue over at my place on Saturday, so was outside enjoying the weather.
Okay. You know, the next
nice.
question is what we got to know what you grilled up.
Nothing too crazy. Did classic burgers, Chicago-style dogs. Best way to do a hot dog is with all the pickled vegetables and whatnot.
Love it.
And then I did a 24-hour sous vide pork butt that I turned into just full pork.
This guy, he's like, oh, nothing special. Nothing special. All right, so that's the Italian hot dog, or Chicago style, I shouldn't say. That's not the same thing necessarily. Two different things. The Chicago style dog is a loaded one. Can you give everybody the toppings on that?
Very loaded. Yellow mustard, bright green relish. Colors are very important here. You got to get your sport peppers on there. You got to get your sliced tomato. You got to get your diced onions.
Yes.
And unfortunately, I was not able to secure this, but I think a pretty critical part is the poppy seed bun. Traditionally, I could only get brioche buns, so those weren't bad. But the poppy seed is the classic vehicle for all that.
Jeez, yeah, not hard, not easy to find a poppy seed hot dog bun here in the Northeast. But yeah, see, I get lost on the mustard and the relish. That's where it gets me. But important part, yeah. Okay, so I also just want to know, and we'll move on from your grill session right after this. But obviously, the pulled pork amazing, the hot dog amazing. For your burger, is it ground chuck? Is it a mix? Is it a frozen Bubba burger? What kind of burger are you whipping up on the grill?
I went pretty simple with it this time, 80-20 ground chuck. And then when I do a mix, I mix in a little mayo and a little Dijon. Salt and pepper, but that's really all that goes into the mix. Hand pressed.
That's all he says, but what he didn't tell you was he went out and bought a half cow beforehand, hand ground the meat, and then put it all together.
No, my half cow actually doesn't come until later in the month, so I wasn't able to use it on this barbecue.
They sell that on Butcher Box now, the half cow.
They do.
Anyway, that's incredible, man. Ben, I don't know. We say we got to get to Mark's for a barbecue, and we're not doing it, but I think we need to start doing it. Okay. Ben, you're at the Jersey Shore.
Damn.
And I don't know if you would want me to do this, but too bad. I'm exposing you on air. Happy birthday. Ben's birthday. We won't disclose his age, not necessary. Maybe that can be a fun game for the chat. Why don't you go ahead and guess how old Ben is? I know we're going to get Doug's going to get a guess in. But anyway,
we probably said it before on the show.
Yeah, and you can do the math. You can figure it out somewhere. But excellent. Well, let's get into the show. Today we are going to be covering. We got guesses coming in. Today we're going to be covering a couple things. Of course, if you've tuned into this show over the last few weeks, we've been educating you on the King Condor strategy, the components of it, why we ended up where we ended up with the strategy. And if you've been watching those, you're probably like, well, the bot's not so hot. What's going on? Well, we're in a position now. We'll see how it goes today. We are in a bit of a drawdown here in July, but we're very confident about the strategy long term. And the most important thing, if you're a King Condor trader, is to be diversifying with our other automated option strategies. One of the best ones being Shorebo, which we will cover today. We're going to get started on our Shorebo bot, which is a 0DTE SPX directional spread strategy with a hedge built in. We're going to talk all about that over the next few weeks. We also have stock in real life. We'll be getting into that. And then, well, if there's any questions on results or anything else, let us know. I think we should announce some new partnerships by the end of the call here. And Ben, I think you need to give an update on how BenBot's doing, just because we love it so much right now.
Sure. Let's get into that in a little bit.
No problem. So where do we want to start? Stocks in real life?
Let's do it. Today we're going to be talking about Skechers. That's ticker SKX. Good for your feet, good for the world. And Mark had a phenomenal reaction to that slogan backstage before we went live, which was, Mark?
It's just, I forget exactly what I said, but that's a pretty dumb slogan. I got to be honest. I love it.
It's what do you hate about it?
I mean, listen, I'm no marketer, so, maybe I'm the one that's off here, but connecting like footwear to like global happiness seems like a little bit of a stretch. Like, make good shoes. You're not like solving world famine.
Hey,
what about the founder of Tom's? Do you think he had it right? Because that was footwear, and he was trying to do some good. Or Tom. What is it? Tom.
No, it's Tom's.
It's Tom's, right?
Yeah.
I don't know about this.
Oh, Tom's. Yeah, they were like, for every pair of shoe you purchase, they donated a pair to a kid in need or individual in need, which is nice. I don't know how much Skechers is doing for the world. I'm sure if we were to go to their site, there's going to be something that they're doing. But they have been around for quite some time. I'm going to pull up. I mean, at least as a business, couldn't tell you. We're going to find out how long they've been publicly traded. But Mark, do you find yourself in Skechers ever? I'm gonna guess.
No.
I'm gonna guess no. You're like, don't need that level of comfort while I'm, cooking my burgers.
I was just trying to Google Skechers good for the world, and a bigger hit was, are they good for Disneyland? So I think that might be the kind of demographic we're marketing to here.
Listen, I'll tell you what. Before we get into it, Ben's got something up here. Okay, so this is what Skechers is doing for the community here. All right, well, hey, Bob's for dogs. A lot of animals. We're animal lovers here. What about the people? Yeah. Okay, all right, we're getting there.
There you go.
Is that a Croc? Does Skechers own Crocs?
No.
Then why is there a Croc on this? That looks damn near a Croc, doesn't it?
That looks very Croc-like.
Not as holy. Maybe they have non-holy Crocs themselves. But anyway, okay. I mean, that's a Croc without the holes. That is a non-buoyant.
That's just a clog. That's a good old rubber clog.
Okay, Skechers. I wore Skechers as a kid. I have not worn Skechers as an adult. However, say what you want, they're kind of on a comeback. I got Skechers stores popping up all over the place here in northern New Jersey. Literally stores dedicated to Skechers. Not a shoe store with a Skechers section, a Skechers store. And they've got you covered. I mean,
they've got a lot of options now.
Yeah, and they're getting a bit more modern and trying to be cool and hip with the design as opposed to like the shoe for dads or grandparents. My parents swear by it. Both my parents, I think, wear Skechers now at this point. So maybe that is the target audience. Let's look at the stock. Or Ben, are you in Skechers ever? I don't think so.
Skechers was big in the whole meme stock era. Let me get my trading view calendar up.
Yeah, I wonder when that was.
Switch over here. And I remember trading it back then. I have not traded it in quite a while, and I don't think I've traded it since I opened my Tradier account. But I want to take a look at what was the date of all like the meme stock nonsense? Was it
in COVID?
It was before COVID. Yeah.
Man,
I don't know. I can't remember this.
Probably intentionally wiping our memories of it, truthfully.
Yeah. I mean, we can see leading into COVID, we were already dipping, and then COVID comes along and just knocks this stock all the way down, beats it all the way down to $17, and then we bounce right back over the next year or so all the way up to $50. So what is that? 3x?
Yeah.
Could have 3x your money there. Don't know what happened here, but it seemed like Skechers is a pretty volatile ticker to be trading. These sharp moves up and down, I would imagine you could probably earn some pretty nice premium. So take a look at this. This is interesting. So from the COVID crash, rise up, 3x your investment, then you lose 50% of your investment if you hold on for another 12 months. And then you go from $32 all the way up to $75. And then here we are now. Oh, what's happened recently? What's up with the low vol here?
I don't know what's going on there. Maybe something we got to take a look at. So
and it's not even earnings related. They jumped like after that earnings report, like a couple days after.
Interesting. What's going on here? May 5th,
May
Cinco
5th.
de Mayo.
big jump. And
And
then,
then they're just flat.
Skechers agrees to be acquired by 3G Capital for $63 a share.
Whoa.
that's where it's trading.
Are we
It's
delisted?
actually turning slightly over, yeah.
Interesting.
Yeah, I mean, the consolidation on it is nutty. There's just no movement since May 5th at all.
Interesting. So it's a slightly unique merger in that under the terms of the agreement, shareholders can either take $63 in cash, or probably why it's partially trading over. I mean, something can trade over because they think another suitor is going to come in, and escalate the bid. But in this case, it might be due to the fact that shareholders can elect to receive $57 in cash plus one LLC unit in the future entity. So there is the possibility that they can hold on to it. So that might be what's creating some of that premium over the cash price. We're talking about like a nickel premium here, but still,
Right.
usually you expect that to trade at a discount to, relative to the interest rate towards the deal date.
Yep. Very interesting. I don't know if I've seen an arrangement like that before. Trying to... Go ahead, Dillon.
Sorry to interrupt. The earnings report today? Today. Yeah, they're reporting earnings literally today. I don't know when exactly today, but so that's interesting. I have no idea what to do with this after looking at that chart and the fact that they're reporting earnings today. They've missed their last two earnings reports. February, they missed by a good bit. Looks like they just missed their mark in Q1.
Yeah, they're no
My guess
longer...
is nothing happens on earnings, right? Like earnings isn't going to be what drives the value of the stock going forward. It's whether this deal goes through.
Yeah.
And given like the price of volatility right now, I see a reading in the front month of like 7. The 90-day options are trading at like a 5 vol. So it looks pretty certain that, like they're only the serial months listed. But the Oct 62 put is offered at 20 cents. So that to me suggests quite a bit of deal certainty here.
Yeah, I'm looking at the options chain for January 15, 2027. So that's about 18 months out. And we could pick up a put at the 62.50 strike for about 20 cents, and we could pick up a call at the 65 strike for about 15 cents. So if we wanted to gamble a little bit and say this deal is not going to work out, we could buy an 18-month straddle and just see what happens, which I might do.
How do you like that, Mark?
That to me says there's I don't know anything about the deal other than what I've read in the last 5 minutes on this show. But just the pricing alone says to me that's very certain. No one's offering 20-cent puts if that's not a lock.
Yep.
Huh. Yeah, this is a very weird chart to look at. Never seen it. Well, I shouldn't say I've never seen it, but I don't know.
So
Okay.
trade idea for the day for SKX. I'm going to put it out there. Buy an 18-month straddle, or actually this would be a strangle because I would assume we would want to buy the 62.50 put and then buy the 65 call, and then we can send that to our ticket here.
Not
Let's just say
financial advice, by the
We're
way.
gonna do one. It's gonna cost us about 30 cents to get set up. So if we wanted to, we can really have some fun with this. Get a $3,000 trade going here.
So to me, what I'm looking at, I would actually go to October, or I haven't looked at September yet quite, but it doesn't look like there's a bid. But in October, I see $1.25 bid for the 62.5 call. That if you sell that at 62.5, you've got a decent amount of security to the downside, assuming this deal is going to go through, and you collect a little bit of premium on that. We're talking like maybe 6 or 7% annualized. So this isn't going to be a crush of a trade, but given the certainty of that, that's probably the direction I would be more inclined to lead. But deals are dicey, right? Like only getting paid 6-7% of that, for that tail down risk. It's like part of me would also, my financial advisor hat on, says just buy a bond, man.
Lot easier. A lot less stress, if you will. Okay. So there's a couple different things to look at here with Skechers. Mark, when you were looking at it, no assumed date or anything about that. I'm sure we didn't get into the details, but this may be a silly question, but like Ben, if you were to pull up like a weekly condor on Skechers, if that's available, wonder what it's paying. I mean, if you're just trying to do that over the last 3 months, the price literally hasn't moved at all.
Yeah, I doubt it's paying anything.
Yeah.
I mean, it's the same prices here. I mean, you have to go at the money. You'd have to sell a fly, really.
Right. Gotcha. Okay. What else on Skechers, guys? Reporting earnings today. Big deal potentially brewing here.
Best detail I can find is that they're hoping to close at the end of the third quarter.
All right. That's good.
So the October expiration would be primed for that.
Yeah, and that's probably where that $1.25 bid comes from on the 62.5 call.
Yep. Makes sense. Cool.
Okay. Awesome. All right. Well, that's Skechers. That's stock in real life. Good luck to them, and to maybe finding a better slogan for Mark. And let's move right along into let's get educated. Let's head on into the bot shop, and let's talk Shorbo, which is short for short orb opening range breakout strategy. Kick it to you guys.
Awesome. I will give us the flyover. So in previous weeks, we talked about the King Condor. We broke down the King Condor into all of the different parameters that we've included in this bot strategy. We are going to do the same for Shorbo. So today we are going to just kind of do a bit of an overview of Shorbo, give you a highlight into things to come, what we are going to be talking about over the next couple of weeks, and show some results because this bot is live. It is trading in accounts. We'll look at some back tests. And just have a general discussion about Shorbo and maybe how it even fits in with the King Condor strategy. So what we will be covering, and we'll get into what the strategy actually is in just a second, we'll be covering entry time, reversals, because there are reversal entries possible here, how we choose the strike prices, the spread widths, stop losses and to take profits, and VIX, because VIX does have a small impact on this strategy as well. So we're looking at about 6 weeks ahead, 6 weeks of really great information and breaking down this strategy. Now, the strategy itself, and here's our base. So just like we had for the King Condor, we have a base back test that we're going to look at and compare to what if we changed one of these parameters and why we chose what we chose, so we can see how it affects the different back tests. So this strategy is actually a combination of two different strategies, and that's on an opening range breakout on the high and an opening range breakout on the low. And we'll go into detail what exactly we do for those. But just to cover the numbers here. So we're going to be going from May 16th, 2022, and that's the day that daily expirations became available on SPX. So that's the furthest back we can go to backtest this, all the way to July 26th, which was 2 days ago. That's when we last ran the backtest. Those are going to be our dates for the next 6 weeks as we're covering this strategy. Overall P&L, and this is based on having a starting capital of $10,000. Overall P&L, about $17.7 thousand. That's a compound annual growth rate of 37.5%. Fantastic there. Max drawdown of 14.2% during that time. And those are the key numbers. The win rate, which we have a separate sheet, not in the backtesting software, is about 70%. So that is kind of in line to where our previous spots were, trend spread, wheel. But this is a completely different strategy. It is SPX only. The thing that I like about looking at this equity curve here is, let's see if I can get a good zoom on it. When the market's drifting down like it did earlier this year, this strategy is moving up, and this strategy does well when there's strong direction. It doesn't matter whether the direction's bullish or bearish. If there's a strong defined direction, that's when this strategy excels, and we can kind of see that. And then since this surge upwards, we've been kind of flat over the last couple of months. So that is something to keep in mind with all strategies, right? There will be periods of time where when you're in it, feel like forever, where you'll be flat. And then there'll be periods of time where you're just on a massive, massive run and you think you're unstoppable, kind of like this part of the chart right here. We've seen both sides, right? For King Condor right now, we're in that flat to pullback part in July, right? But when we look back to May and June, we were like, this strategy is incredible. Nothing can stop us. So I know, Mark, you've been dabbling with Shorvo for just a little while. I don't know if we ever went over all of the parameters of the strategy recently, but what are your general thoughts on this strategy?
I generally like this strategy as, and you sort of hinted it at the very beginning of this kind of piece, was that as a general diversifier compared to the types of opportunities that we're looking to capture with, say, King Condor. And while they're both like credit strategies and you're selling volatility in both scenarios, that the delta move or the underlying movements that you're kind of targeting are different. And, we know that when the market breaks out in one direction, like that's likely to be hurting a Condor type position, whereas that's going to be working out for a Shorvo type position. So I think in general, my philosophy, or why I like this bot and why I'm including it in my stable, is because it captures a slightly different facet of the opportunities. Still using that same filter, still using those same kind of indicators for deciding when to trade and when not to trade, importantly. But yeah, like I like it overall as a diversifier. And, I think the other important point is, like you mentioned, that there are going to be slow times with this bot and with any bot, that kind of the sitting on your hands aspect of trading. And I think this goes no matter what type of trading you're doing, whether you're market making, positional trading, or capturing algorithmic bot opportunities, that like there are times when you need to be sitting on your hands. And it's the hardest thing. And it's the hardest thing to watch your account do nothing. But, you can't force an opportunity. And so, to that extent, like if you're looking at your portfolio and your bot's not doing anything, one of the things I do in my client accounts is keep that actively allocated to cash and, reallocate, cash sweeps towards interest-bearing securities and at least collect a little bit of an interest tailwind on your positions in your kind of options capital while it's just waiting for the opportunities. So I have to consider that time out of market and selectiveness very much a feature, not a bug.
Great take.
Yeah.
I'll tell you, truly right now in July, it's having a great month. And we can look at the results here in a second. Of course, Ben, if you scroll up, there's a difference, at least when we're selling this or speaking of this to the retail trader. Not necessarily if you want to go over to Mark and have him handle this for you, which you can. Look at the banner below, peakbot.com/harvested. But there's a starting budget of about 10K, all right, mentally. right? We want to help you weigh your portfolio without giving you financial advice. But you want to come in here with runway. That's how the strategy was back tested over the last 3 years, with that as the starting budget, the preset budget. Also, it helps with the drawdowns. Go ahead, Ben.
Quick comment, because I'm just noticing this now. I think in one of our website refreshes, this data, some of it needs to be refreshed now because it doesn't match up to what the back test is showing.
Okay.
We had to go through some database refreshes over the last week, so this is just a quick update. But
I think we need to update that chart too.
Yeah, the chart needs to be updated, but these numbers are still accurate. These numbers are good.
So the bot itself in July, and Ben, I can pull it up on screen, or you can pull it up. I think just
if you got the results calendar up, that's definitely accurate. And then we can go over the averages and stuff like that.
All right, perfect. So here, I'm gonna remove yours, get mine up here, or try to. We're all clicking. We're all clicking backstage. I'm not clicking anything. Get it up. All right. So, so here's July. By the way, peakbot.com/Shorbo, and you'll get these results. This is July. All right. So I'll zoom in here a little bit. If we're talking about the $10,000 preset budget, now note that most of that cash is not actually being utilized in the trade, but up over 5% if we're talking 10K budget. Now, the reality of the trade, which we'll dive into today and over the next few weeks, it's a $5 spread on SPX. So if we're talking about return, we'll quickly move on from this, but you guys can see what we're getting at. Cash utilized for each trade is $500. If you're doing ROI from that calculation, you can see that this bot's doubled your cash in July alone. But again, we're setting a $10,000 mental budget around each unit for this. I don't know if you guys are losing me. My camera was cutting out, but
no, you're good. We can hear you.
Okay, cool. So I just wanted you guys to see, for anybody who's trading just King Condor and not giving Shorbo a shot, boy, it would have been nice to have this running the whole time, right? So be diversified. Let's get into some of the other numbers. I'll pull this down.
Okay, I do want to go back to that and just look at the past couple of months to see what performance looked like, because I do like looking back at history. But the average win over this back test period was about $150, so about $1.50 in credit earned. The average loss was about $260. So on days that we are looking like a loser, there could be a reversal entry that is made, which earns you a little bit more credit to soften that blow. Because if you're doing the math in your head here, you're thinking, okay, average win is $1.50. That means I get $1.50 on a $5 spread. That means I have $350 of overall risk if the trade moves against me. So how is the average $260? Well, that's because there's a reversal trade that could happen to earn you about $100 for $1.10 more in credit, and soften that blow. And then we assume one of those spreads will lose, but again, we've softened the blow, and the trade doesn't hurt as bad. The largest win that we've had over this period, $351. Now there could be the case where we get a reversal trade and we actually win on both sides. So we could win on a call credit spread and a put credit spread. The largest loss is $634. Now, I'm trying to think about how that could be the case, and we've updated our logic so that way this could not be the case anymore. Where, let's say price is going up, we sell a put credit spread because we think price is going to keep going up for the rest of the day. Price reverses, shoots way down, we get a reversal, and instead of having a sold iron condor position, or iron fly, which is where we could win both sides, we would have a bought condor position where we could actually lose both sides if we wind up in the middle of those strike prices. So a double loss scenario, which is not possible anymore. We're going to leave it in the back test data, but the way that we've designed the bot, if a strike price on a reversal would create a bought condor, long condor position, we're just going to sell the strike to form a fly and collect as much credit as we can via that method, because we don't want to put ourselves in a scenario where we can have a double loss. So 434 wins, and that's per side. That's not on the day. And then, actually, sorry, that is per day. We did this per day, and then 178 losing days. Max drawdown of 14%, and that's on the $10,000 set aside. And this trades almost every day. It's about 16 trades on average per month, average about 21 trading days per month. So it'll sit out for economic events. Like we got FOMC this week. Shorebro's not going to trade tomorrow, Wednesday. And it typically follows Max's 0DTE or bot trading schedule. That won't be the case for always. The more and more we get into this and the more and more testing we do, the philosophy of keep calm and trade on it's seeming to prove out that should be the case. And I know Mark's just sitting back in his chair like, yeah, I've been telling you guys this for years.
It's true. When you look at the backtest data versus the live trade data, backtests are in certain months on certain strategies beating what we're doing live because it's trading through those economic events. But by the way, if we want to just pull this up here quickly, Ben, we can just look at what it's done so far in 2025. Of course, we have data over the last 3 years, but I'm going to just pull this up quickly. Here is January, and I'll zoom in just a little bit, okay? But this is back tested. The strategy actually launched, 3 weeks ago, I'd say? Don't quote me on that, but close.
Maybe we've been live for a month.
So here's January. All right. We can see traded a little less than 16 times just by visually looking at that, but $1,000 here. So that's over a 10% return based on the cash allotted. An even better return if you're talking about cash used. February, almost 4%, bringing in nearly $400 per contract or per unit, you will. I guess it's technically a spread. March, absolutely insane. The best month I think this bot has seen, again, back tested, but nearly a 20% return on your 10K. And notice all these days, it's not trading. These are just without looking at it, we're preventing some blow up days here for sure. Okay. And that's a big deal for you as the retail trader not to have to worry about that. April, another monster month, nearly 10%, almost $1,000 brought in. May, we see a loser, first loser of the year. All right, down almost 3.7%. June, May and June back to back, lost about 3.5%. And we are making up our ground here so far in July. All right, so, and the trade log is here for you as well. All right, going all the way back. You can see every trade going back to 2022. But I just wanted to share that for the results so far this year. And we've been trading it in July. So anybody who's been on it, having a good month. Yes, we're all taking the same trade here.
Well, as much as I want to always say keep calm and condor on, and there's a lot that you need to kind of have confidence in your strategy and through the slow times, the hard times, the good times. But I think one of the things that we're always doing is constantly asking, what might have changed here, right? Like as much as you want to keep letting that go, keep letting that automate and stay strong, the markets are constantly changing and the strategies are going to have their downtimes, but they're also going to expire and you need to be refreshed and need to have new economic events added to them, need to add, different strike widths as price changes. So as much as you want to stick to a system, that system itself also needs to continue to evolve.
Adapt or die. That's exactly right. Did we want to look at what this looks like on a chart for entry, or did we want to save that for next week, or what do you guys think?
Yeah, well, if you want to show an entry, let's give a little tease there, and then because next week we're going to be talking about time of entry.
Cool. So let's see here. I'm going to pull up my screen, and we'll get started. All right. So this is SPX. We're going to look at Friday's trade here. Okay. So what we're looking at, and let's just make this a little bit wider so we can see it. All right, so here is the beginning of the day, Friday on the 25th. Going into the day, the criteria was met for the trade to enter, meaning no economic events getting in the way, no volatility index numbers getting in the way. We're ready for a trade if the trade is ready for us. So opening range breakout, we're looking at 15-minute bars here. So this green bar, I've got blue lines going across the high and the low of the first 15 minutes, which is what we'll call the opening range, okay? So the idea of the strategy is between 10 a.m., which is technically the end of this bar here, and noon, marked by my orange vertical line here. If we see a candle, if we see a 15-minute candle break orb, okay, close above or below orb, we will enter a trade. Okay, so we can see here that with the wicks, this is our opening range. No trade, no trade. Okay, we break north of orb. So that tells me, Ben, I would assume if we looked at it in our Tradier accounts, we would have entered a trade right around 10:30. So we can see that this green bar here closed north of the opening range, which is now a breakout, and it's bullish. So we're going to sell a put credit spread. All right, we're going to enter a bullish trade, and we can get into the rounding to the nearest number and how far out of the money we're going, but we're grabbing a strike $10 out of the money. So essentially, in this scenario, we're going to sell a put. If this bar closed at 375, that means we're going to grab the 365 sold put. So we're just going to call it this red line down here, okay? And Ben, you'll step in if I'm misinforming here. But now what that means is we have our orb. We broke orb. We're going to sell a put and collect an average of about $150 in premium. Yeah. We've got some breathing room here. Now, if we can stay above this red line for the rest of the day, we'll take a W. And so we can see we did so. All right. We stayed well above. The market drifted up and just at the end of the day, maybe tailed off a little bit, but a very secure win. It was $90 in premium. It was a little low on Friday, lower than usual. But the trade did, the market did exactly what the bot needed. It, you guys know what I'm getting at. It worked out. We won.
Usually the way it works out is you will sell the opposite spread right at the opposite orb line. So if breaking high, we'll sell a put right at the low orb line. And what happened Friday, this is textbook market behavior that we're looking for, right? We're looking to take early direction and then just drift in that direction for the rest of the day. If price had come back and broken through the bottom of orb before 12 p.m. Eastern, we would have gotten a reversal entry, and that's when we would have formed that iron condor. And potentially won both sides if we finish between orb, right? That's how the strategy is kind of designed. But again, I'll say, and I think you could confidently say this because we've got a 70-ish% win rate here. I'd say that, you know, most of the time, 7 out of 10 times, market's gonna choose direction early on, and then we're gonna drift in that direction later on. There have been times where we've seen a roller coaster, right? Where we, let's say, start off the day heading up, and then we dip back down, and then we pop back up, and then we'll win that trade. Yeah, overall, it's been performing pretty well.
Yeah, and this is on the day before. If I'm not mistaken, we took a win on Thursday as well. So I was just showing people $113 win on Thursday. This was the opening range, broke just north on the second bar here. Well, first opportunity to get in. So we're bullish for the rest of the day. And then our line was 360, essentially the bottom of orb. This is the one we were sweating it out. Don't look at your charts when you're trading this stuff, because these last two bars here were sinking fast. But full win, you know, close only counts in horseshoes and hand grenades. That's not true. It definitely counts in trading, but in this scenario, not so much. We took the win. So that's the idea. I just wanted to show what it looks like on the chart. But a sound strategy. Millions of people trade orb. I don't know about millions, but a lot.
Cool. And then I'll just give a brief update on BenBot.
We changing the name on that or what? It's getting a little late.
Yeah, we should change the name. I want to change the name. I don't want it to be BenBot. But in July, it's I mean, we're having technically a quote unquote bad month. Still up 1.3%, which yeah, I'm not complaining about that. And these are all live trades, by the way. These are trades in my personal account that I can go back to. This is half man, half machine. We're letting the bot enter the position, and then I'm exiting the position. I'll make 1 or 2 adjustments throughout the day, if that. Sometimes it'll just be a take profit. But if we go all the way back to March did well, plus 4%. April, plus 3.4%. May, best month so far. That's about 6% return. And then June, we slowed down a bit, 1.6%. And then July, we've got 4 days left in July. Uh-oh. Can you guys hear that?
Oh, yeah. You're on fire.
Yeah, we're on fire here.
Who's cooking bacon?
I'll be back.
You go ahead and mute yourself. We can take over from here.
All right.
That's actually the Ben bot getting ready to enter.
Those are his secret signals.
It's letting them know less than 20 minutes till market. Get ready. Yeah, Ben still has his screen up, which is totally fine. You can see July's results there. Mark, I don't know about you, but for us and a lot of our newer traders, with enough cash, right? BenBot's a daily covered call strategy on IWM, so you got to have, call it 22-ish K. We'll call it 25 for some buffer. It's become the kind of the stable part of the portfolio. It's more so an investment strategy than it is a trading strategy. Certainly when you're looking at it compared to Shorebo and King Condor, right? We're kind of trading the market. The worst case scenario is we lose what the market lost that day minus the premium we collected. What do you think about that type of a daily covered call strategy on something like IWM, generally speaking?
You know, honestly, I was a skeptic at the beginning of it, and I've slowly come around to kind of where this can fit. You know, I was actually talking to a client this morning about including this as a slice of an allocation in one of the larger portfolios that I'm managing. And I think, you know, while on the one hand, you are cutting off the potential upside returns that do come from equities. And, you know, I think that's an important thing to remember in any covered call strategy is what you're giving away there. But, you know, compared to kind of some of the other bots, this is taking quite a bit less risk. That, you know, your downside is quote unquote only as bad as, you know, what could happen in the equity markets on a given day. Whereas, you know, a lot of the accounts that are trading, whether it's a Shorebo or King Condor, you know, those tend to be more leverage strategies, right? And we, of course, balance that out with the proper cash allocations and whatnot. But you tend to see a lot more volatility of results in a strategy like that. So I think, you know, the returns that we're seeing in IWM and, you know, the way it's being selective about when it trades, I think it adds a lot of value to a portfolio and can definitely make up a good solid component. So I officially count myself as a moderate convert to the BenBot.
Nice.
All right.
All we need to do is switch the name and switch the name, and then he's definitely all in.
What if we called it the Mark bot? Would that
just throw
fully
people
convert
off?
you?
Am I getting licensing fees off? Am I getting royalties off every trade? Maybe. Sure, you can call it the
Careful,
Mark
Ben. I think we call it the daily drip. Truthfully, I like that one. And it is. It's a daily little drip.
I like it. If Mark didn't take this name already, I would like calling it like the harvesting bot.
Yeah,
Because you're harvesting your covered calls every day, harvesting premium.
We can call it like Harvey or something. No, it's not Harvey. I feel like Harvey's not a great
It's a tough name this decade.
Man, the weight of what one person can do to a name. Anyway, okay, so we'll come up with a new name, but fantastic strategy. Again, for me and for a lot of others, it's the core of the portfolio because of the limitations and the lack of risk from a drawdown standpoint, from a zero overnight exposure, the birthday bot.
Every day is your birthday when you're trading that bot.
Yeah, it's true, and they can't take it away from you. Awesome. So we're 15 minutes from market open. Ben, we joked that those were your BenBot sirens going off, telling the bot to get ready.
It was the bacon, by the way.
It was the bacon. Okay, who's responsible? Yeah. No names, but just a general
family member for the bacon.
Was it the person? Would you expect this out of this person, or was this
isn't the first time?
All right, I know who it is. Perfect. Let's get on out of here. So again, just to review, Skechers. Who knows what's going on? Good luck if you're trading Skechers. Not financial advice. Shorebo, fantastic strategy, a trading strategy, 0 DTE, SPX. Again, having a fantastic month here in July. So, and BenBot and whatever we're going to name it in the future, stable. By the way, Mark, you said in your stable, like as opposed to a portfolio, you use the word in the stable, and I can't not use it now. I think I'm just going to be getting a bit more Western with my trading terminology. I'm going stable.
Cool. I like it. Let's make it happen. Let's make it happen.
Maybe because you're already there, harvested, your color palette with the branding, you're there. Stable is the right word for you. I got to jump in on it. All right. Is there anything else, guys, that we want to get off of our chests? Let's get out of here.
Let's get out of here. Market's coming up. We got to get to work.
Thank you so much to everybody who tuned in this morning. We will be back live Friday morning. I'm sorry. I guess technically morning, 11:55 a.m. Eastern time with the automation station, where we'll be diving more into live trades and our results. Thank you so much. And as always, see you at the peak. Take care, everybody.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.